Good morning, June 23rd, 2012. I hope your Saturday morning is starting out well. You are listening to Mortgage Matters. Thank you for joining us today. I'm joined as usual by Mark Antonowski. We have a great show for you today. I'm very, very excited. Here in a few moments, we're going to be joined by Mark Spino, who is a private money lender and probably the most knowledgeable guy I've known in the business. I've been doing it for 20 years and haven't met a better private money lender, and we'll get into hearing from Mark in a little bit. Right now, I'm really excited. We're joined by Mark Spino. I met Mark about 10 years ago when he moved down here from, I believe, Washington.
Yes, I did.
And met him at a mortgage industry event, and right away hit it off with Mark, and am very, very grateful that Mark was able to join us today. Mark, tell us a little bit about you, where you work, what's your history in the business, and fill us in on what you're doing.
Well, first of all, thanks for having me. I've been in the private money lending business for a little more than 20 years. Found my way down to Arizona about 10 years ago, and it's all I do. And I found my way into this business 20 years ago. I fell in love with it, and took a trip down to Arizona on a workout property we were dealing with, and
it was raining up in Seattle that day, and it was sunny down here, and you golfed, and you said, I'm moving to Arizona.
Absolutely. It was a December. I was driving with my arm out the window, and I called my wife, and I said, we're coming down to Arizona. Never looked back.
Never looked back. And where are you at currently now?
I'm an investor, and I am a licensed loan originator with Kenwood Mortgage Investments in Scottsdale. And
you've been with Kenwood for a few years now?
I've been with them a couple years now. I officially retired about 4 years ago, and as the joke goes,
that didn't last long.
I couldn't be my wife's best girlfriend during the day, so my wife said, "Get out and get back to work and start making more real estate investments." And so we're out there actively pursuing real estate loans, private money loans, and we do first position loans. Kenwood Mortgage funds loans, and loans amount from $30,000 to $5 million on residential and commercial property. And we're active. We're active in this market. We do quite a bit of advertising. Kenwood Mortgage is owned by Randy and Rose Person. They've had that company for about 20 years now, and it's been a good fit. We're good friends. We think the same way. We go out and we look at every property we make a loan on, and we just have a meeting of the minds. It's been a good fit for all of us.
Now, you say private money, and folks out there listening today may say, okay, I'm interested in hard money, or I may need a hard money loan. Is there a difference between what many people call hard money, and I'm not talking about quarters and nickels and dimes, but is there a difference between hard money and private money, or are those really one and the same?
That's a good question. If you call me up and say I've got a private money loan or a hard money loan, we all know we're talking about the same thing. In the industry has adopted the term hard money generally to mean the loan is secured against the hard asset or the real estate. I don't use that term, though, when I'm out talking with borrowers, just because borrowers may not be familiar with the term. And if they hear the term hard money for the first time, sometimes they conjure up different ideas in their mind. Maybe they think we're talking about a product that's got them between a rock and a hard place. Right?
And a lot of people are feeling like they're between a rock and a hard place right now. And we'll get into that in a moment.
Yeah, they are. And so I use the term private money when we're advertising to the public. But the fact is, if you call me and you say it's hard money, I'm not going to correct you. Right. We're all talking about the same thing. But the terms are generally not hard. Our terms are actually quite a bit softer than some of the other hard money in town. So that's what we do.
Again, you're listening to Mortgage Matters. This is Dan Huss along with Mark Antonowski. We're joined by Mark Spino on 960 The Patriot. And we're talking this morning about private money with Mark Spino from Kenwood Mortgage and Investments. And a lot of people, if you're out there sitting right now and thinking, okay, why would I maybe need Kenwood Mortgage or Mark Spino? Again, every week, and Mark, you probably get these phone calls too, Mark Antonowski. Customers are calling me up and saying, okay, 6 months ago I had a foreclosure. 6 months ago I had a bankruptcy. 6 months ago I had a short sale, and I've been going to ABC Mortgage and every mortgage company I can find to try and get a loan, and everyone's telling me I can't. I've got to wait 3 years, or I've got to wait 5 years, or I've got to, get my situation cleaned up. And I have no hope that I'm ever going to be able to buy, but I've got some money over here sitting here that I can invest, and there's got to be someone who's willing to lend me some money.
Well, yeah, I mean, what Mark Spino brings to the marketplace is just very exciting because a lot of times people are in between. They had a gap in employment. They're starting a new job. It might be they're self-employed. They have the stated income loan is gone, but they've got some assets, and so they want an asset loan. And for them to be able to go out and buy today, and of course we've seen over 25% appreciation just the last 6 months on the average in the area. So, I mean, to go and rent right now as opposed to buying, is not, in my opinion, it's not the right thing to do, to sit on the sidelines. And what Mark Spino allows you to do is to put down 20 or 30%, have a 12% loan. You'd say, well, why would anybody want to do that? Because it's about the same price as rent. If you look at buying a $200,000 home and putting 20% down and having a $160,000 mortgage, 12% is like 1% of that. That's $1,600. And, that house probably rents for about $1,600 a month. So basically, why rent when you can own? And am I right, Mark?
That's absolutely right. In fact, if a borrower has sticker shock, number one, they're probably not ready for us.
Right.
But when they are investing in a property and they understand the terms, they put the pencil to the paper and they say, you know what, the opportunity outweighs the cost of funds. And so in that sense, by the time they're using our funds, the money is actually cheap by comparison to the amount of money they're making. We're in a very competitive environment. I think a year ago, the properties available on the market the inventory was about 50,000 properties. Now we're down to about 12,000. I mean, the market is tightening.
10,066 as of this morning.
To be exact. See, that's your business. You're good at that. And it's getting tighter every day. And so right now we're in an environment where you either have to have cash to buy a property, or you need a lender that's willing to act as though it's as good as cash. And if you're a buyer and you're pre-qualified for a conventional loan and you need about 30 to 45 days to finish that process, and you're making an offer on the property, but meanwhile there are 4 people climbing over you with all cash offers, who's the seller going to take?
Exactly.
And so in that case, if you've got to close by Friday in a competitive environment, no matter how good of a mortgage broker you are, if you're working with Dan is as good as anybody in the businesses I've ever met. But still, banks have still certain restrictions and dots they have to connect in order to make things happen.
Yep. And
if you've got to pull a fuse by Friday, often you've got to have either cash or you need a private money lender like Kenwood Mortgage backing you up.
Well, it's real estate 101. If the real estate market conservatively right now is going up 1% to 2%. So again, that $200,000 home is going up by $2,000 to $4,000 a month right now. So it's leverage, and you've put 20% down. And look at the return you're getting on your money. But not only that, but in 2 years, when you can refinance out of that 12% loan, that house might be worth $250,000 to $260,000, and now you've got a $1,200 a month payment. So I think you do a tremendous service to the real estate community, Mark.
Well, thank you. And that buyer's going to look back a year from now having made a lot of money.
Very good. We are joined again by Kenwood Mortgage investor Mark Spino, joining us at Mortgage Matters this morning. And we'll be right back with some more specifics about how you may be able to benefit from the products that Mark Spino offers. Again, you're listening to Mortgage Matters. Dan Huss, Mark Antonowski. We'll be right back. Welcome back. You are listening to Mortgage Matters. This is Dan Huss here with Mark Antonowski on this bright, beautiful Saturday morning. Thank you for joining us. We are coming to you on 960 The Patriot, and excited about how we can help you today. We're joined again by Mark Spino with Kenwood Mortgage. Mark, thanks again for joining us. I think when it comes to private money, hard money, a lot of people think, well, that's an investor loan, somebody who's looking to flip a property or, be in a property for a short time. But the market's changing, and there's buyers out there that are looking maybe for a primary home, and they've got some money saved up, and they just can't qualify the more conventional way of going. Do you work with both investors and those buyers out there who are looking for a primary residence as well?
Absolutely. We do a fair mix of both. The investor properties, a lot of properties going to foreclosure, especially in the last year. That's been very active. And that's now that it's started to settle down a little bit. There's less inventory. The investors aren't having as much success as they were a year ago with buying properties at the auction. So now the focus has turned to consumers, people who want to buy a home. They had a foreclosure or a short sale in the last 3 years. They can't qualify for conventional money, but they've been saving their money, and they've got quite a bit to put down. And So if they're putting down quite a bit of money, again, we're making the loan primarily based upon the amount of collateral we have, the loan to value. We're looking for a more conservative loan to value. But we also get a credit report and a loan application because we want to know who we're doing business with. And a lot of times the only thing wrong with their credit might have been the foreclosure they had in the last few years. Meanwhile, they take responsibility for their lives, they pay their bills, and they're otherwise a good risk. And we want to do business with those people.
So you see it, life happens.
Life happens.
And
someone calls and tells me their sad story about how they lost the home, and my comment to them is, well, welcome to the human race. let's get you back in a house.
Right. And so what is that process? If someone's looking, I know, I refer a lot of business to you as someone may come to me that, would think that they would qualify. And we just recently had a example of this. I had a customer who came to me. I've done many loans for them in the past, 800 credit scores, and we got all his documentation, submitted it for underwriting, and lo and behold, he had a commercial short sale that showed up on his tax return that I missed and got caught in underwriting, and he needed to close really quickly, and he wanted this house. And I said, well, you can talk to Mark, see what he can do for you, and then I can refinance you 6 months down the road. And once he was able to file this year's tax return that didn't show that loss from the short sale, we were able to get him approved, and we're actually in the process of finishing up that loan, and I think we'll be paying you guys off next week. So you get a lot of business from me, but what is the process for someone who is looking for a private money loan in process, terms, et cetera?
Well, ideally, that person has already gone out and found a home they want to buy.
Right.
They already know they've got the cash down. They've been talking with a mortgage professional, a mortgage broker, or a mortgage banker, and they have the idea that they're going to have to come up with 20 or 30% down. And
is that where it kind of starts? Your first conversation is, let's see what you have do you have the down payment?
Yes. Usually when a phone call comes in, my first question is, have you identified a property? Do you have an executed purchase contract executed by both sides?
Where Antonowski comes in.
Right. And if hopefully that's the case, because now it tells me as I start to dive into this transaction, I'm not wasting my time. We've got a willing buyer and a willing seller. You've got a property, and they've agreed upon a price. All they need is money to glue the deal together.
Right.
And so my next question is, have you filled out a loan application? Oftentimes they've already been to a bank, they've gone through the approval process, and they can even already provide me with a loan application they've already had filled out. Saves me a lot of time. If they haven't done that, we've got a website. They can go on our website. They can go into our loan application. They can fill it out online, click submit. It automatically loads into our system, and we begin the process.
And that website, by the way, is kenwoodmortgage.com.
Correct.
kenwoodmortgage.com. And you can go on there and apply as well. You can also give me a call or Mark Antonowski a call, and we can put you in touch with Mark. Yeah. Is there red tape involved in the process?
Well, that was my next step. One of the nice things about working with a private lender like Kenwood Mortgage is you're dealing with the investor. We are the source of the capital. So if we're going to approve a loan, we don't approve a loan subject to getting out our database or our Rolodex and going out and trying to find an investor for it. It's all done in-house. So we're not gathering a lot of unnecessary information for somebody that we haven't even met yet. So we keep our files very thin. There's some documentation by law we have to get. And so we do have to put together a file. We get a preliminary title report. I want a loan application. We get a credit report, and we'll get up some kind of documentation of income. But we keep the process very streamlined, very fast, and usually our loans close inside of a week, usually less than 2 weeks, start to finish.
When you say credit report, there's probably someone out there listening today that's saying, man, that applies to me, but my credit, man, it's always been perfect, but last year was tough, and my credit score's, now 580. But if you look at my credit, you'll see that I've paid my bills in the past, and credit's really, really important to me, and I'm hurting that my credit score isn't 800 like it's always been. I don't want the word credit report to scare somebody away from potentially calling you or calling Mark, calling myself in regards to, hey, I want to look into potentially getting a private money loan. Expand more on the credit piece.
Well, we're all used to talking about FICO score, especially banks. They want to know what the FICO score is. Right. Dan, you and I have been in this business long enough. You can look at a credit report, and I can tell you without looking at the FICO score if they take responsibility for their life. Yeah. I can look past a foreclosure. I can look past a medical bankruptcy. We can look past some things that otherwise banks would hold a crucifix up to. I can look at a credit report, and I can say, is this loan going to be a success? So now, on a FICO score, generally, you get below 500.
There's other situations going on.
Right? Yeah, I'm probably going to come to the same conclusion that the FICO score came to. But there are some things that just fall just outside of the bank guidelines that you and I can make a subjective analysis of and put our experience to the table and still do those loans.
And Mark, Mark Antonowski here, how many times do you get a phone call from a broker referring a client or just a client who knows about you that is currently in foreclosure or currently selling their house short, doing a short sale, and you're going to prepare them for their next loan so they don't have to rent? Does that happen frequently?
Not too often. Usually they've already completed the short sale or the foreclosure process.
But it's not impossible that somebody listening to this, our voices today, has the wherewithal, perhaps gift from a family member, and they'd rather go out and buy than rent, and yet they're involved with a short sale foreclosure. Is that a scenario that you can do?
Oh, absolutely. And I want to encourage people that if you're thinking about borrowing private money or you've been disqualified from borrowing conventional money, pick up the phone and call us. I don't want people to put together a great, big, thick, hairy loan file before they call me. It's always a conversation, and usually within 1 minute of just a little bit of dialogue with the borrower, I can tell you on the phone if it's something we can move forward on or if it's something we shouldn't waste our time on.
Absolutely. Mark Spino with Kenwood Mortgage. Mark has graciously volunteered to stay again with us through the next segment. We'll get into his contact information, so get your pen and paper ready, and we'll give you Mark's contact information in a little bit. We'll come back with some more specifics in terms of rates, et cetera, and continue with that process in regards to getting a private money loan. Again, this is Mortgage Matters on 960 The Patriot. We will be right back. Welcome back to Mortgage Matters. Hope your morning is going great. Dan Huss here, joined by Mark Antonowski, and we're back with Mark Spino with Kenwood Mortgage. During the break, Mark, you had some interesting things that you were asking Mr. Spino about.
Well, yeah, I was talking to him about luxury properties because a lot of times the best deals in this market right now are probably your luxury $1 million properties. And I was asking Mark off the air if he lent on the higher end, knowing that that's where you find a lot of self-employed people that just have income from investments. So, Mark, tell me a little bit about the upper end. Are you doing loans for luxury home buyers?
Oh, we love to do the jumbo loans. We just did a loan just a few weeks ago on a gentleman that had a strategic default in his past. He couldn't qualify for conventional money, but he had half to put down on $1 million purchase. And we did that loan. And to make it even better, he said, by the way, I want to be out from underneath this thing in 5 years. I want a full 5-year amortization. So he's making some big payments, but it turned out to be a great transaction for all of us.
And what's so interesting about that is, that's where the hard loans for us in the institutional lending to do, because I have so many clients who are past clients of mine, investors, whatever, who are self-employed. They may have a couple $1 million in the bank, but they're pretty savvy with their tax returns, and their tax returns show a loss, and they've got $2 million in the bank, and I can't get them a loan. We know they would make the payments, but I can't get them a loan because of that.
Well, the absence of traditional financing for jumbo properties explains why that market is really depressed. You can get some great deals on luxury properties right now.
So, what about land? If I bring a client that's got spots of fat, because I think with the market being that it is, a lot of people are focusing on land to build custom homes. Are you doing any lending on short term on land?
We'll do some land, but keep in mind that land doesn't cash flow. So it's
hard to rent it out.
It's hard to rent it out. And as a lender, we ask ourselves, what if something bad happened to this good person and we ended up taking this property back? The idea that it's not going to cash flow. So we're going to be ultimately conservative on that, probably 30 to 40% loan to value as opposed to 70 to 80% on a single family residence. And we want to see the borrower really cash flow.
Let's get back into terms a little bit. Back to the luxury market and the jumbo loans. You had just mentioned, this last loan you had done a 5-year term. If someone's borrowing money, what are we looking at in terms of interest rates, terms, interest only? Are we paying amortization, payments? What are some of the terms that we're looking at?
All those come into play in a single loan. all those topics. So let's see if I can cover that here. Sure. The short answer is the pricing of the loan, interest rate, the interest rate that the investor or the lender gets on the loan. In private money world, those amounts seem to be between 10% as high as 18% on some of the super hard money in town. The number seems to fall around 12%. We'll do between 10 and 13, but the average seems to fall around 12. And then you're going to charge some origination fees. we're going to charge anywhere from 2 to 4 points in an origination fee on that transaction. If it's an investor property, investors typically want to buy so they can flip. They want a short-term loan. They want to keep the payments as low as possible. So typically they're asking for an interest-only loan, and we're willing to do that. All of our loans have no prepayment penalty, so that's good for an investor.
Yep.
If it's going to be an owner-occupied property, now comes in the Dodd-Frank Act.
Yes.
Which is no one's friend, including the consumer or the banking industry, but the Dodd-Frank has been very restrictive on all lending, and it also includes private lenders. Yeah. And there are certain disclosures and certain loan terms we have to give. So the loan has to be at least a 5-year term if it's owner-occupied, and there has to be some form of amortization schedule. In other words, the federal government says if the borrower's making payments, you have to give them the opportunity to make principal reductions, and an amortization schedule does that.
So, it's back to my first example of a $200,000 home, but now somebody wants to buy the $1 million home that just did a strategic default on a $2 million loan that's, the house that's only going to be worth maybe $1.5 million in 10 years, so a strategic default. And they come to you with $500,000. That $1 million home would rent again for about $5,000. At 12%, 1% a month, that's about a $5,000 a month payment. They're paying the same as rent, but now they control an asset. It makes, and what are they going to get with their $500,000 in the bank? 1%. So it makes total sense for somebody looking to buy luxury to come to you and do a deal.
Well, they control an asset that's also going to begin appreciating the day they buy it.
Leveraged, sure.
Absolutely. Well, Mark Spino with Kenwood Mortgage, thanks for joining us today. Mark, I think we could go on for hours and hours in regards to this topic, just because there's so many people out there, again, that are just don't think that they're able to buy. They have some money, and there's an answer for them. And I know we didn't even touch the surface of the questions or the information or the knowledge that you can bring. So thanks for joining us today. I want to give everyone Mark Spino's contact information. Again, Mark Spino, Kenwood Mortgage and Investments. Telephone number 480-783-8800, 480-783-8800. You can also go to kenwoodmortgage.com, kenwoodmortgage.com, and reach Mark. So any questions, please give Mark a call. If you didn't get that, contact us anytime during the week off air, and we can put you in touch with Mark Spino.
Dan and Mark, thank you very much. It's been a lot of fun.
You're listening to Mortgage Matters.